Hi everyone and welcome to the Franchising Matters video series. My name is Steve Bjors and I'm CEO of Reshift Media. Today we're going to be talking about franchise development, lead generation, and some of the trends that we're seeing for 2025. Just before we jump in, for those of you who are new to the channel, thought I'd tell you a little bit about who Reshift is. We're a digital marketing company that specializes in franchise organizations. We manage social media, search, website development, influencer marketing, and everything else you can think of from a digital marketing perspective. We're also the inventors and owners of Franify, which is the world's most popular franchise development digital marketing platform. We'll be seeing some data from that platform today. We've also been named the world's best franchise marketing company for 3 years in a row, #1 in Entrepreneur Magazine's franchising category, and Disruptor of the Year by the International Business Awards. Enough about us, let's jump into the data. So one of the things we always like to look at is how many people are actively looking for a franchise at any given time. So this is data from the US, specifically from Google Trends. So what we do is we pull a cross-section of various franchise development terms, such as best franchise to own a franchise, franchise opportunities, and a bunch of other ones. So we have several dozen terms in here and we graph them indexed to 100 to give us a bit of a sense of where the peaks and valleys are in terms of people using Google to look for a franchise. So think of this kind of like the Dow Jones for franchise development interest. So what we're doing here is we're approximating interest based on how much or how frequently people are searching for franchise development terms on Google. So this chart goes all the way back to 2022. So what you can see here is through the start of 2022, we were off to a very good start. High interest, lots of search volume around the franchise development terms. Very steep decrease going through the back end of 2022. Bit of a flat line through most of 2023 into 2024. We did see a major dip in search volume going into the summer of 2024 with a reasonable rebound in the fall. That isn't unusual, by the way. It's quite common to see during the summer months, people are searching less. And then going into September, October, November, we do see a rebound. I would say that the decrease in the summer of 2024 was a little bigger than we typically see, but we were happy to see that bounce back. And then if we look forward into Q1 of 2025, we've seen an absolutely massive increase in people looking for a franchise. In fact, if we plot that over the years, from 2022 to 2023, we saw a decrease of about 10% in Q1 to Q1. It was about flat from that same period into 2024. And from Q1 of 2024 to the current quarter in 2025, we've seen an increase of about 12%. So this is really positive indicator. What it tells us is that people are very actively looking for a franchise in the start of 2025. In fact, more so than we've seen in the last few years. So this shows that interest in franchising is quite high. Now, one of the things we tend to look at is, how can we understand why that's happening? So these red lines here, going back to 2022, is every time the U.S. Fed increased interest rates. So as you may recall, through 2022 and 2023 was a prolonged period of multiple interest rate increases. And you can see as interest rates continued to go up, enthusiasm for franchising or interest in franchising was declining. And this isn't to say that it's a causal relationship per se. So what I mean by that is it's not that interest rates going up make people less interested in franchising per se, but interest rate trends tend to help predict how the economy overall is going. And in an environment where interest rates are going up, usually the economy and economic factors aren't as favorable from a franchising perspective. So it's more of a correlation than a causation sort of relationship. Now, having said that, as we all know, when people are buying into a franchise, it's often financed with debt. So increasing interest rates certainly has a dampening effect on that. Now, contrast that with what we're seeing more recently. We've seen the Fed decrease interest rates in Q4 of 2024, which clearly has had a positive impact going into 2025. People are feeling that economic fundamentals are good, and we are seeing a major increase in the U.S. specifically in Q1. Now, typically when we're presenting this data for Canada, We do use US data. The reason for that is there's just a lot more volume in the US, and therefore the trend line is more clear. And typically the Canadian data largely follows the trend lines in the US. However, as we all know, there have been a lot of macroeconomic factors at play lately, a lot of international trade disruption. Stock markets have been quite volatile. So what we did is we actually pulled the Google Trends data for Canada over the same period. So you can see first off, the graph is much more volatile. That's simply because there's less data available, so small changes have a disproportionately big impact. So you have to look at this over a bit of a longer term trend. But let's compare this now, doing the same thing we did to the last graph. So what this shows is from Q1 of 2022 to 2023, there was about a 4% decrease in search volume, about flat into 2024. And quite interestingly, and the opposite of the US, from 2024 Q1 to 2025, we've seen a decrease of 13%. So let's plot that against the US numbers just to give you a sense. So through 2022 to 2024, you can see the trends were similar. Obviously, US went down a little more in 2023, but the same sort of trend was occurring. And we've now seen a major inflection point where Canada is, in fact, performing much differently than the US in 2025. Our sense of this, in having worked with franchise organizations in Canada and in the US, is that in Canada, the economic and macroeconomic trade conversations are having a disproportionate effect relative to the US in terms of people's uncertainty around the market. So what this means is, because people aren't sure what's going to be happening in the economy through 2025, they're less interested in opening their own business, which is a shame, because those of you who follow this channel would have seen that our predictions Reshift were that 2025 was set to be an incredibly good year for franchise development. Everything was going in the right direction, and we fully expected that here in Canada, we would see the same sort of increase in franchise development interest that we saw in the US. So in the US, what we're seeing is a big increase. Again, in speaking with US organizations, frankly, they're just not as worried about what's happening outside of the US from a trade perspective. The market is plenty big in the US. People are interested in franchising. So we haven't seen that same dampening of enthusiasm in the US that we're seeing in Canada. Let's dig a little deeper into the metrics. So these are Canadian numbers from our Franify system. So what we're trying to give you a sense here is what are we seeing from an ad performance perspective. So one of the key things we look at is click-through rate. So click-through rate is interesting because this shows the likelihood that someone clicks an ad after they've seen it. Now, we do include several different platforms here. So this includes Meta, LinkedIn, and Google, which do have different click behaviors. But again, we've indexed this to 100 to give you an overall trend. So the part to look at here is obviously in Q1. So, in Q4 of 2024 going into Q1. So we saw a prolonged period where click-through rate was constantly increasing. Going into the fall period, we saw a major decrease right here. That isn't all that concerning. As I mentioned before, going into sort of November, December, we do usually see a decrease in click-through rate, particularly in December. People are busy. They might still be interested in franchising, but they're not necessarily engaging as heavily because there's a lot going on. What is more concerning is what we're seeing in January, February, March here. So what we would normally see is an increase in click-through rate in Q1. So there's typically two periods of the year which are most positive for franchise development. That's Q1, specifically kind of the back half of January. February and March are usually pretty good. And then going into April, we start to see a bit of a decline going into the summer. And the other period that's usually quite good is September, October, November. So that sort of fall period. So this year, we have not seen the increase in click-through that we typically would see in that first quarter. Now, if we plot this against conversion rate, so conversion rate isn't people necessarily buying franchises in this instance because this is digital ads. What this indicates is someone has clicked an ad and then either phoned to get more information through a call tracking number, or completed a form for more information. So conversion in this instance means someone has actually reached out to the franchise organization for more information. So trending over time is quite steady, as you can see, except for right here in April of 2025. There's a really strong spike in conversion rate. So again, what this means is more people as a percentage of people who've clicked an ad are now reaching out to that franchise organization. So this number is actually quite misleading, because what's happening in Canada is there's lower volume of people. So there's less people looking for a franchise in this period than typical. The click-through rate, although not high, is fairly steady. So what's tending to happen here is you just have fewer people clicking through, but with still a kind of generally the same number of conversions. So what we're seeing on our end here at Reshift is the number of people reaching out to franchise organizations has actually remained fairly steady, although we would expect it to be up typically this time of year. But because the percentage of people reaching out compared to the number of people interested in a franchise has kind of flipped a little bit this year, that number looks higher than it should be. So all that to say that don't get too excited that the conversion rate is up. That's actually just because the pool of available people is in fact not where it should be this time of year. The third metric to look at is cost per lead. So it's not unusual to see some variability throughout the year like you see here, where typically we do see a spike in the cost per lead during high volume periods, March and April and into the summer. That's a couple of reasons. One is there tends to be a lot more competition in Q1 as franchise organizations are advertising and looking for franchisees. And the other thing is through the summer, there's a smaller pool. So the cost per lead tends to be higher. Interestingly, we do tend to see a bit of a dip in cost per lead, often going into the fall. And this is because the volume goes up before necessarily advertising has come into market. What we're seeing right now is that cost per lead is actually quite steady. So what this says is that there is, of course, competition. People are, in fact, advertising to get new franchisees. But relative to the pool of people available and the number of people clicking, the cost per lead hasn't really increased, which is a little bit of a surprise. I would have expected, given the smaller pool than usual, that we'd see a bit more of a spike there. But the good news is the overall cost per lead is remaining fairly steady, and that's almost certainly because we've seen the number of leads remain quite steady, which is why the cost per conversion rate, has spiked up. So what are our expectations? So if you were to watch the previous version of this video from a few months ago, we were very bullish on 2025 for franchise development. But we didn't know that there was going to be all of this geopolitical instability, and that has had a major dampening effect, particularly in Canada. Now, having said that, the economic fundamentals are pretty favorable. So what we're expecting is that either the economic instability will sort of settle down, where perhaps some trade deals are struck, or what will happen, as often does, is things just normalize, where people get used to the new normal. And once people kind of feel a little more confident that the underlying economic fundamentals are okay, we do expect that we will see an increase in franchise purchase interest. So what's interesting about this is, depending when that happens, we may see some unusually heavy activity during what's normally down periods. As an example, if people start to feel pretty good about the economy, or there's some really strong positive economic news in the summer, we may see more interest in franchising during that period. Because what's probably happening right now is people who normally would be coming into market at this time of year aren't, because they're worried about where the economy in Canada is going, and again, potential trade issues, etc. So once those concerns are less prevalent, those people will probably come into market. So we may very well see a spike at a very unexpected time of year. The other thing we expect is, because overall interest is down at this point in time, Demand and competition for leads is going to be much higher. So we do expect to see upward pressure on the cost per lead. Now, let's talk about what you can be doing as a franchise organization to get your fair share of leads during whatever the period is, whether it's up or down, and what you should be preparing for, given what I just talked about from a trending perspective. The first thing to realize is that franchisees have in fact gone digital. So it's now a self-managed journey. Franchisees are deciding on what franchises they're interested in on their own. They aren't necessarily having to go through other means like they may have had to do before. And they certainly aren't relying on franchisors to tell them about their franchise organization. By the time they reach out to you, they've almost certainly done their homework already. So the first step is understanding that they have gone digital and they are using digital opportunities to learn about your franchise and your competitors. So once you're there, you realize that you need to be active at all levels of the purchase funnel. So when we're working with franchise systems, what we recommend is a full funnel approach where you're working at the top of the purchase funnel, the middle, and the bottom. What that means is the top of the funnel is where someone's in consideration. General awareness. They're aware of franchising. Maybe they're mulling it around, but they haven't actually made a decision to do it or not. As they move through the funnel, they start to think it's a good idea for them. They start to look at different sectors they might be interested in, different brands. By the time they get near the bottom of the funnel, they're already creating their short list of who they're going to reach out to. So what you want to do as a franchise organization is engage in outbound advertising, which tends to be near the top of the funnel, and inbound advertising, which tends to be more near the bottom of the funnel. The best place to start is always search. So search lives right at the bottom of the funnel. This is someone's gone to Google and they're searching for best pet franchise, or maybe they've done some homework and they're searching for your brand and your competitors' brands. The best part about search is when someone does a search, they are telling you exactly what they're interested in. And by the time they start making those very keyword dense searches, like best franchise to own in the pet space, they've done their research and they're close to making a decision. So these people tend to be the best leads you're going to get. So what you want to do is you want to optimize your website for searches. So organic search, meaning someone's gone to Google, they've done a relevant search, and they click the organic listings results on Google or Bing. That is typically your best possible lead because this person is already at the point where they've made a decision. They're typically self-qualified, and these are the types of leads you want to make sure you're getting. So you want to optimize your website to make sure that it's gathering those leads, it has the right keywords. One of the key things we talk to franchise organizations about is don't create your franchise website on its own URL. So if my company is reshiftmedia.com, I want my franchise site to be reshiftmedia.com/franchising or franchise or buy a franchise or whatever it is. I don't want it to be reshiftmediafranchise.com. That's a completely different website in Google's eyes and simply doesn't get the same level of indexing. You won't have the right level of visibility. All you're doing is fragmenting your search authority. So one of the key things I would recommend is make sure you nest your franchise site as part of your main website. That'll really help. And consider ongoing content creation. Don't think you just put one page on your website about franchising and your job is done. You need to create articles, talk about why your franchise is a good opportunity, have multiple pages of content, multiple articles that help you get noticed and get people coming to your site. Now, organic only gets you so far. It's incredibly competitive to be able to rank for good franchise terms organically. So every franchise development campaign absolutely needs paid search. If you spend money on nothing else, spend money on paid search. Again, the reason is people are going to Google. They're telling you explicitly that they're interested in buying a franchise. So this is an opportunity for you to get in front of those people, hopefully bring them into your environment and get them to contact you to learn more. The best thing about paid search is you can bid on the specific terms you're looking for. So high converting terms like buy a restaurant franchise, own a pet franchise, profitable franchise, terms like that. And don't try and bet on just 5 terms and hope for the best. Our campaigns typically have dozens of different terms. You don't necessarily need that one home run term if you can get 20 singles, right? So 20 terms that do quite well versus one term that does really well often is much more cost effective. What I really like about paid search is it's incredibly measurable, very configurable, and allows you to get right to the top of the search results. And it looks very strong, particularly on mobile, because it's such a small screen, you can dominate the top of that screen. In terms of some search advertising best practices, as I just said, bid on a variety of terms. So do bid on your own brand. I know a lot of people have a love-hate with this strategy, but if you're not going to do it, your competitors are. And branded terms on search advertising are cheap. They're usually pennies. You pay pennies per click, and it's worth it to just make sure that your competitors aren't able to outrank you for your own term. Industry-specific terms, franchise terms, business terms, competitor terms. So it's fair game to bid on your competitor terms. It's a good opportunity, particularly if you're a newer or smaller brand in your industry. We do find that keywords and headlines with the term franchise opportunity or business opportunity perform well. Financial related terms perform well. Profitable franchise, a good franchise to invest in. So those are some of the sorts of phrases you want to be able to use. Once you figure you're doing a good job at SEO and paid search, you start to move up more into the middle and a little bit into the top with social media. So social media is great because it's an outbound medium and it can be very effective at creating awareness about your franchising opportunity and generating leads. There's lots of different social platforms. We've used pretty much every platform you can imagine to generate franchise leads. Which one works for you largely depends on your franchise. So Facebook and Instagram are kind of mainstays. They have a very large audience, very good ad units, and we do actually have quite a bit of success using Meta for franchise development. TikTok has worked. It depends on your brand. If you skew a bit younger, if your franchisees tend to be younger, if you have good video content, TikTok's actually an interesting opportunity. Reddit can actually be a great opportunity. Overall advertising costs tend to be a little lower. Competition's a little lower. And you can get into some subreddits and areas that could be quite interesting. Pinterest is a very visual medium. Can be good depending on which types of franchisees you're looking for, and again, your brand attributes. And LinkedIn's an interesting one, which we have used quite a bit. For some brands, LinkedIn actually works tremendously well, and for other brands, it just doesn't work at all. So it very much depends what who your brand is attracting, where you want to be. So I do want to talk a little bit about lead ads. So we do use Meta's lead ads quite a bit for franchise development. LinkedIn has these, TikTok has these as well. The idea, if you're watching the video, as you can see on the right, the ad has a form incorporated right into it. So when I click the ad, I don't actually go off to a landing page. I stay right within Meta or right within TikTok, and the form is right there. The beauty of this is the friction is basically eliminated, meaning any drop-off you might have from leaving Facebook and going to the landing page is completely eliminated. And it's really easy because the form's right there and you can even pre-populate some of it. So very low friction. So on one hand, you will get more leads with this. Your lead volume will absolutely increase just because of your reduction in friction. On the other hand, because it's so easy, you often get a lot of false positives. So where someone completes a form, you try and contact them, and they will literally say, "What are you talking about? I don't remember reaching out to you." And it's not that they didn't reach out to you, it's that they literally don't remember because it was quick and easy and they didn't really realize what they were doing sometimes. As funny as that sounds to say. So you do have to find that balance. So what we typically do is we customize the form to a degree. We're trying to force them to turn their brain on and think about some of the information they have to provide, which we find increases the quality and gets rid of some of those false positives. In terms of some social advertising best practices, photos of franchisees inside or in front of their business perform well. This cartoon image we have here is an example. Obviously, you wouldn't use a cartoon, you'd use a real photo, but the idea of having a proud franchisee standing in front of their location with their arms crossed, this by far performs better than any other image we've ever used. Use action terms in your copy. Enjoy a proven business. Start your own franchise with. And one tip that I would give you is that you avoid photos and videos that look a little too polished. You actually want something that feels kind of real and kind of natural. Another opportunity, once you feel you're doing good on social, is perhaps to include video. So video is absolutely the most engaging medium you're going to get on social or on YouTube, TikTok. It allows you to tell a real story about your franchising opportunity. So you can use it in your social ads, particularly if you're doing TikTok. You don't really have a lot of choice. But also think about including video on your website and your landing pages. So this could be franchisee testimonials. It could be a store walkthrough. It could be your CEO talking about why your concept is the best one. But just think about ways how video could help engage and get that person to learn a little more about your brand and hopefully reach out to inquire about a franchise. Short form video, Instagram Reels, YouTube Shorts, and TikTok. It's absolutely explosive. We've had some good success transforming longer videos or even just photos into a short form video. So again, this depends largely on your audience. If you tend to skew young for franchisees, really think about short-term video. TikTok in particular is kind of the king of short-form video. Think about it if it fits your brand. Now, once you feel like you're doing a good job on everything else, sort of the very tip top of the awareness is display. Of the awareness part of the purchase funnel is display. So display advertising really is a super cost-effective way to get advertising and a brand message out to as many people as possible. Don't start with this though, because if you're doing a lot of display advertising, typically display doesn't get a lot of clicks. It's usually a fraction of a percent. So all you're doing, if you're doing a ton of outbound advertising without any inbound or any lower funnel advertising of any kind, is you're simply creating demand for your competitors. You're raising awareness about your industry and why it's a good idea, and then your competitor is going to reap the rewards when someone moves down that purchase funnel and is at the point of making a decision. So really important that display advertising be used in conjunction with other things. But the nice thing is, if you are going for a very specific geography, let's say you need a franchisee in a specific area, a province or a city or a metro area, you can advertise with social and search and display and create a real domination effect where you're flooding that one market with advertising in an effort to get that franchisee. It can be very, very effective. In terms of best practices, as I said, display doesn't drive clicks much on its own, so you should pair it with other strategies. Keep the creative and messaging simple and clear. So remembering that this is about raising awareness, don't expect it to close a deal for you. So keep your ads simple. Don't try and cram too much copy in there. Don't expect the person's going to sit there and read it. You're going to be creating a brand impression. And the other opportunity for you to think about is audio. So Spotify is an example of a real top of funnel opportunity. They do allow you to still target by interest, age, gender, location, other factors. But what's interesting is you can get on podcasts or just create audio ads that represent an opportunity to just create, again, branding and awareness. I wouldn't count on this to drive a ton of leads, but again, as an opportunity to perhaps get in front of very specific audiences. And it does tend to be quite a dedicated following. Because they're listening to it maybe as they're jogging or exercising. There is a real opportunity there to create that impression and then follow it up with social advertising, search advertising. And one that's often missed is influencer marketing. So obviously, you're not going to go out and get professional influencers because that doesn't make a lot of sense. But you have built-in influencers within your organization, and it's your franchisees. So your franchisees obviously believe in the brand, they've bought in. Having them create text and video testimonials for your websites and campaigns, having them post about why your franchise organization is a great one to be a part of. It's low-hanging fruit, and it provides real social proof that your franchise is a good one to be part of. So really encourage you to think about your franchisees as kind of internal influencers. Overall summary is that, as I said, geopolitical uncertainty has certainly had a major impact on franchise development here in Canada. But the good news is that industry fundamentals are very encouraging. So the overall pool of active candidates is smaller currently, and lead volume is still steady though, which is the good news. So although the pool is lower, people are still interested. Competition for candidates is really high, so make sure you got a good marketing plan. So don't just throw a campaign out there and hope for the best. Have a proper plan. Think about who you're targeting. Think about what platforms you want to use. And every franchise system is different, so don't try and do everything I've talked about today. It's way too much. Be smart about where you spend your money. Think about the platforms, as I said, that make sense. And find the messaging that works for you. If anyone has any questions, I'd certainly be happy to talk to them. My contact details are there on the screen. I also encourage you to scan the QR code you see, and you're able to download a free report from us. We created a 2025 digital trends report. You can download that absolutely free. And I really want to thank you for your time. Appreciate you spending some time on our podcast, and have a great day.